Wonderful. So first and foremost, let me say a massive welcome to my taster session on solicitors accounts. That won the poll. So that's what we're going to be looking at as a little bit of a taster tonight, but lovely to see so many of you here. My name is Dr. Elliot Schatzberger. Please do call me Elliot. If you have any questions, then drop me a line in the chat box, or do feel free to ask away at the end of the session as well. There'll be some time at the end for some Q&A for obvious reasons. So we'll do that at the end. But let me get straight into tonight's session. We only really have an hour. So let me start by explaining what we're going to do. When I run my SQE course, SQE1, as I'm sure you all know, is based on multiple choice. And what it is 360 questions that you have to do. You do 90 on morning one, 90 on afternoon one, and 90 and 90 on day two. You only have 1 minute 42 seconds to answer each question. As again, maybe you've done the maths, maybe you haven't. I certainly have. So how do I run my sessions? Well, I run my sessions mainly using textbooks called Revise SQE. I share my screen. They're on Kindle or they're on Glassbox, and I share my screen with you guys as I go along, and we go through the questions at the end of each chapter, week in, week out, dealing with chapter after chapter, questions after questions. If you want a number, roughly speaking, over the entire course with me before your exams, we look at well over 1,000 questions, okay, to prepare you, well over, okay? So that's number one. So what are we going to do this evening? Well, this evening I thought I would share with you some of my tips, strategies, techniques, specifically in relation to solicitors' accounts. Now, first and foremost, if you are anything like me, you guys are all trying to become solicitors. So why on earth do you have to learn solicitors' accounts? It's really annoying. I didn't understand it. I do now. One of the reasons is this, and the book makes this very clear, but I'm going to make this very clear as my introduction. When you are a solicitor, hopefully you will be working your way up the ladder, maybe becoming a partner one day, maybe becoming one of the managers of the firm one day. But even as a low-level solicitor, you will be dealing with your clients, and you may well end up dealing with their money, telling them what you're charging, asking them to pay bills, etc., etc. So money will come through to your firm. The SRA keep a very, very close eye on solicitors and how they deal with client money. How you deal with your own money, your firm's money, that's up to you. Doesn't really matter. But dealing with client money is very, very serious. The SRA say, and they do publish these reports every now and again, that when they are having to take action against errant solicitors, solicitors that have broken the rules, 25% of those cases are about money, are about handling client money. So therefore, there are rules. Now, I'm just going to preempt something that may or may not happen. In the future, the SRA at the moment are seriously looking at taking solicitors' accounts and the solicitor's ability to handle client money away from solicitors completely and hand it over to third-party fund managers, money managers. Okay, that's something they're really looking at. But at the moment, that is not the case. So it may well be, if I'm still teaching this in a year, 2 years, 3 years, I may not be teaching solicitors' accounts. It may come off the syllabus completely, but I'm afraid not now. So we need to know these basic rules. The SRA make it very clear that the SQE exams are to get you ready to be a day one competent solicitor. And it also says, when you keep reading the small print, it also says, so that you will not be sued, or words to that effect. They're trying to make sure that you, as a new solicitor, are not going to break rules, either professional conduct, ethics, black letter law, whatever it might be, but certainly accounts. Now, here's the good news. When you actually do the SQE exam, and Solicitors Accounts is part of FLK2, so it's on day 2 of your 2 days of your SQE1 exams, there aren't many questions on Solicitors Accounts. There are a few, but they are real, what I call nuts and bolts basics. Nuts and bolts basics. Okay, so that's really the important thing. Okay, it is very, very clear what you need to be aware of when you are doing solicitors accounts. It's mainly two things: rules, which are written by the SRA, and double entry bookkeeping, I'm afraid. Okay, now it's not as bad as it sounds, but there are rules that we need to know. So what I thought I would do this evening is just take you through chapter 1, really, of the Reviser SQE book on solicitors accounts, just so that you get a bit of a taster of what this subject is all about, and of course how I teach it. So without further ado, what I'm going to do is share my screen, and we will go from there. Now, I'll just show you the books that I use, and it is these ones. Okay, you can all see that, I'm sure. So these are the books that I use, and essentially, I don't just read them with you, I don't just read them to you. We use them as workbooks. So we go through them, we look at the questions, I'll show you the questions, we'll look at the answers, and we'll find out why the right answer is the right answer. So that's generally how I teach this. But there is one slight difference with the way we're doing it tonight. Normally, I would go through the multiple choice questions, and I do that with a lot of my taster sessions. I'm going to talk about those tonight, but interestingly, with this particular module, there are no questions at the end of chapter 1. Why? Because what they want to do is give you a real overview. I will highlight what some of these questions will look like. They're in the rest of the chapters. But tonight, we're going to do something just a little bit different. And we're going to go through the actual chapter itself. Now, when I teach and when I run my course, I tend to just introduce the chapter. Julia's with me at the moment. Julia will know that's exactly what I do. So essentially, I give you an overview of the chapter. I'll tell you what it's all about. Let's say, for example, if we're dealing with contract law and we start with offer and acceptance, I'll talk a little bit about the black letter law first. I'll introduce the subject, and then we move on and spend most of our time dissecting the questions. This one is just a little bit different because this is an overview. So what I want to show you is how this works. So each chapter starts by telling you what you need to know, and it gives you a nice formulaic chart telling you the key points that we're going to focus on in these chapters. So it tells you right away that we're going to look at the rules. It tells you that we're going to look at business and client money and business and client bank accounts. If you don't understand that concept, you really can't do accounts at all. So you need to know what is client, what is business. And I'm going to talk about that in just a moment. Then we start to look at double entry bookkeeping. And again, I'll explain all of this as I would to my students as we go along. And we'll look at things called ledgers. That's where you record the entries of your bookkeeping. So it's nice in these books. It tells you exactly what we're going to look at. It then repeats it in a nice, simple format. It then tells you that what we're going to look at and what we're going to focus on are these rules and why they matter. But these books are fabulous because they link it directly to the exams. What is it you need to know? Client, business, double entry. And then it starts to tell you, and we'll look at this in a moment, that when you do double entry bookkeeping, there is a debit one side and a credit the other side. Don't worry about that right now. I'm going to explain what that means in a minute. So there is then a nice little section about what do you know already. And what they're really saying to you is, have you read the chapter? Okay, they want you, as I do when I'm teaching you, to have read the chapter ahead of the session. When I run my course, it's all I ask. Okay, the only real commitment other than attendance, which is really important for my live sessions, is read the chapter we're about to go through. Just so, as if you're at law school, as if you're doing your LLB, as if you're in a normal classroom, you just know a little bit about what I'm about to say over the course of the class. So it kind of goes through that, and it gives you a bit of a true or false scenario. We're not going to look at that tonight, but they give you a little bit of a true or false. Do you know this? Do you not know this? Let's move on. So all I'm going to do tonight is really explain what this is all about, as I would do in my course. If I'm teaching solicitors accounts, when I'm teaching solicitors accounts, I do this exactly as I'm doing it with you this evening. So the start point is always this. Why do we need to do it? I've already explained that. And we need to do it because if you don't do it, you are setting yourself up for a non-compliance complaint against you. It's really, really key. Because if you take client money and you put it in your firm's account, wrong. Of course it's wrong. So we need to understand what is client money and what is your own money. And it's not always as obvious as it sounds. Then it tells us that there are rules, and these are written by the SRA, and they're called the SRA Accounts Rules. The most up-to-date version, by the way, is 2019. That's the most up-to-date version. They are on the SRA website, and I don't need to tell you guys who the SRA are. Of course, they are the regulator of solicitors. So the rules apply to your business. And therefore, what is the most important thing here is to understand the difference between your money, we'll call it your, as in the law firm, and the client's money. There are some really obvious examples, and I'm just going to pick up on one, again, that this book nicely tells you. If you are dealing with a client and that client is a personal representative of someone who's died and they are your client, there may be money coming in from that estate, maybe from the deceased person's bank account, maybe from the sale of their property. That money may be coming in to you to look after while it all goes through probate, the system, of course, when someone dies. So you are holding that money on behalf of the personal representatives while all the inheritance tax, everything else is sorted out. Then we're giving it back to the personal representatives to distribute. That's obvious. So therefore, when that money comes in, it is not your money. It is client money. Obviously, you are holding it for the client. meaning we've got to do something quite different with that money to what we would do with money if it was your own money. Let's say that your personal representatives suddenly pay the bill that you've sent them. That's your money. You do something different again with your money. And it's obvious what you do, but we'll look at it in a second. So, golden rule here is you've got to follow these rules. And rule number one really is that client money and your own money must be kept separate, both physically and in your bookkeeping. That's how this works, physically and in your bookkeeping. So what that means, of course, is that you need to open a minimum of 2 separate physical bank accounts. One, the firm's, and one, the client's, the overall clients. And I'm going to come on to that in a minute. So that really is absolutely key. So what are some of these major points of the Solicitors Accounts Rules? And this is where, for example, the multiple choice questions start to kick in, because there are principles set down in these SRA codes of conduct. Principle, for example, number 2 is that you act in a way that upholds public trust and confidence in the profession we are all in. Principle 4, honesty. Okay. Number 5, safeguarding money, assets entrusted to you, you keep them separate. So these principles, again, are really, really important. So for example, you may well get a multiple choice question based on these principles. And let's say that you get principle 2, principle 4, 4.2, 5.2, all of those are listed. But one principle is missing, okay? And you need to spot the one that is missing or the one that isn't the right one, something completely different. So all of these are really ripe for these multiple choice questions. But let's move on. As I said, when you are dealing with solicitors' accounts, it could be in a number of different contexts. So your multiple choice question could be a question scenario based on property, based on wills, which it normally is, based on land or trusts. It could be any of those things. And your question is on accounts, but within those topic areas. So it might be a scenario that basically tells you Julia has left a will. In her will, she leaves a property. The personal representative is Charlotte. Charlotte now needs advice on what is going to happen to the money from the property that Julia has now sold or through probate has sold. So it's those kinds of questions. And how are they logged in terms of your solicitor's accounts? So it doesn't really matter what the topic is, because the rules are the same for every topic. But be aware that it can be based on a property scenario, a will scenario, land scenario. It could be anything. But that's only your factual matrix of your question. Your answer is always, if you're dealing with an accounts question, going to be on those accounts. So what do we need to know? Well, first and foremost, as I said, most importantly, we need to know what is client money. And we'll come on to that in just a moment. Now, this nice little table tells you that client money is talked about in rule number 2 of the Solicitors Accounts Rules. And then it cross-references the relevant chapter of this book, or if you like, of my lecture as I'm going through the course or my session on this topic. And this would be chapter 2 and chapter 3. It then goes on to talk to you about when client money can be withheld from a client account. What is a client account? Keeping it separate. And then we've got interest. We've got breach of the rules. We've got bookkeeping and record keeping. So all of those are set out here. And all this is doing is telling you what's in this book. It would also, of course, tell you, if you're with me, what I'm going to do session by session, because I follow the chapters of these books. Absolutely. So it then talks about other things like third-party accounts. We'll look at that in a moment, and accountants' reports at the end of your year. So first thing then is that we need to make sure that we keep client money separate from firm or business money. So the first thing we need to absolutely understand is that physically we've got to have, generally speaking, at least these two separate bank accounts. Okay? One for you, one for clients. Now, one thing you might notice is I deliberately said the word clients, plural. You do not open up a separate account for every single client. And thereby lies the problem of bookkeeping, but we'll come on to that in a minute. You don't. If you're a big law firm, you might have 100 clients. You might have 1,000 clients. Of course, you're not going to open up a separate bank account for every single one. So therefore, you can open up just one. And we call that the general client account. It must have a name. It must be called the client account. It must also have your firm's name attached to it. So it might be the client account Yulia LLP as an example. Okay, so it's got to have the names of the firm, not the individual partners of the firm, just the name of the firm, and client in the title, and it has to be at a bank in England or Wales. You can see how these are ripe for multiple choice, can't you? Absolutely. Okay. Can Yulia open up a bank account in A, England, B, Wales, C, England or Wales, D, Scotland, E, Northern Ireland? England or Wales would be the answer. Okay, so you can see exactly how these questions manifest themselves. But you must have this separate bank account. Now, your own business account, your own bank account, you can kind of do whatever you want, really. And you would open that up so that money for you goes into that account. But you must not put client money into your business account. Weirdly, but it's not really weirdly, you can put business money into your client's account. As long as you suddenly realize it's actually yours, you can transfer it back again. But you must never make sure that you put client money in the business account. It's a massive breach of the rules. It's one of the things that you can, I'm not saying you would be, but you can be shut down for. So it is really, really important. So as I say, we need to know what business money is, but that's obvious. It's money that belongs to you for payment of bills, disbursements, fees, that kind of thing. And if you know that's for you, that goes into your business bank account. But client money is different. As I've already said, it does not belong to you. It either belongs to your client or it might be for someone else, okay? Like land registry, like council, it could be for anybody else, but it isn't for you. So therefore, anything that isn't for you must go into your client bank account. Now, I did say that you only really need one client account. As always, with anything to do with law or procedure, there are exceptions. And I'm just going to run through those exceptions. Firstly, you do not need a separate client account if you never handle client money. So for example, if you are a criminal law firm, and you are only ever having money into your firm from, let's call it legal aid, okay, because we all are familiar with that term. It's not called that anymore, of course, but we'll call it that. So from legal aid, from the public purse, okay, it's not from the client. It's not for the client. So therefore, you don't need a client account. But how rare is it for a firm to be only a criminal law firm that only deals with legal aid? Even if you are a criminal law firm, generally there is an area of your firm that deals with private clients, okay, or private corporate clients, or whatever it might be. So essentially, okay, unless you have no public money coming in, then there's got to be a client account. Secondly, there is another exception, and that is where you are holding money on behalf of a client with, let's say, mental health issues. It's gone through the court of protection. You are what's known as a deputy in terms of these mental health issues. It's not going to go in the client account. You hold that money in a separate deputyship account. But again, that's quite niche, quite rare. Do you need to know that for the multiple choice? You need to know it exists, but that's about all. You're not expected to know anything about court of protection or how that works, by the way. But do know that if you are dealing with court of protection and you are a deputy appointed by the court of protection to look after someone's money, maybe power of attorney, for example, then you do not need to open a client account. You need to open a deputyship account, something different. But that's quite niche. Again, the other one is where you are holding money for a specific client, okay? And they have asked you specifically to open up a separate designated account. Then they'll have their own account. That's mainly where there's a lot of money coming in from them and they want interest. So therefore, putting it into their own account, you're going to know exactly what interest to pay them. In the general account, one problem is interest. If you've got 100 clients and money is coming in and in and in from all these clients, it's only going in one bank account. That bank, be it HSBC, Santander, whoever it might be, are only going to pay interest on that once for the overall amount. How much then do you give your client? Because another rule that we look at much later is interest. How do we decide how much interest to pay our client? The answer, by the way, just to go forward to that chapter, is that you pay them a sum in lieu of interest, instead of interest that you've either agreed with them or a sum that is a fair sum every now and again that you agree with them. So you work out what a fair sum would be. There are other rules on that. I'm not going to go into them tonight. But essentially, the general rule is that there will be a general client account, and the money, therefore, would go into that account. So the next question is, what is client money? Well, as I've already said, it's relatively obvious most of the time. Most of the time, client money is money which you've got control over, but which is not yours. It's money you're holding for them. Now, it could well be things like I've already said. Money has come in from a deceased person. You are holding that money from the sale of that property while it goes through probate, and eventually it's going to go to the personal representatives. That's clearly client money, not yours. So it goes in to the client account. But one other major thing where it would be client money is if they give you money on account. In other words, up front, which the vast majority, if not all, law firms do. They always ask for money up front, just in case you start doing work, which you would do, and your client decides to just run away and not pay you. So there is always money up front before you've done any work. And that is called money on account, before you've sent them a bill. And that is their money, not yours. So that again must go in the general client account. Very important. And as you can imagine, these are the things that are always tested. Okay, so that is really all there is to do with physical money in this chapter. Then we're going to move on to double entry. And what I thought I would do is just explain the basics of double entry bookkeeping. Now, this is not just something that law firms do. This is generally by most businesses across the world that keep track of any financial transactions. Why do we need to do this? Well, especially when you're a law firm. What I said is this, isn't it? Money comes in from 100 clients. It all goes physically into one account. How the heck do you know what client has what money? How do you know? Because another rule is that you can never take money from a client account when they don't have money in their account. You can overdraw your own account, sure, but you can never overdraw a client account. So if our client is Yulia, and Yulia only has £500 that she's given to us, we can't suddenly send £600 out to pay counsel for Yulia out of Yulia's money, because Yulia doesn't have 600. She only has 500. So the question at this point is, how do we know? Well, we know through bookkeeping. This is record keeping. They have to, or you have to, keep a balance of every single client and their money and what's been spent and what comes in. And that is bookkeeping. So how does it work? Well, essentially, there are what are called ledgers. And it's a very, very kind of old-fashioned term in a way, but it still exists. And ledgers are these bookkeeping account sheets. That's what they are. Think of them as data entry, whatever you want to call it, really. But they are called different names. They're sometimes called journal entries, and each ledger is also called a journal, by the way. Really confusing. Or it's called a ledger. So the ledger is what you do. So how does it work? Well, essentially, when we're talking about clients, each client has their own ledger. So if, let's say, I can see 4 people on my screen, Yulia, Charlotte, Alexander, and Saad. If those 4 people are my clients, I've got to have a ledger for each of them that is bang up to date with all the money in, all the money out, so that I can see at a glance who has got what, who owes what, who's paid what, etc. So each client has their own ledger. Therefore, when money comes in, it gets logged in the client ledger. But where does the double entry come? There will also be another ledger where the entry is double booked, double entered, if you like. I'll give you the most obvious one, and we'll come back to this later, and that is what's known as the cash sheet or the cash ledger. Okay. Now, the cash sheet is effectively your own office sheet of all money coming in and out, physical money coming in and out, nothing else, only that physical money. So let's say, for example, if Julia pays me £500 on account and that money has actually come in, there would be an entry on Julia's ledger and there would be an entry in the cash ledger to show that money has been paid by Julia into the firm. And I'll talk about how that looks in just a moment. But what it is, most importantly, is a debit credit system. Now, I'm going to start with this really weird one because it's counterintuitive. It goes against everything you know about bank statements, money in, money out. And I'm going to talk about the cash sheet ledger in simple terms for tonight. Okay. Obviously, if you join me, the course goes on, we go into far more detail, but it's just a taster. So let me show you what I mean. Let's say Julia gives me money, £500 on account of work I haven't done. So Julia gives me that money. It comes into my cash sheet. With me so far? Excellent. So the money comes in. Now, here's the weird thing. Any money in to the firm in the cash sheet is actually debit. That's weird, isn't it? Not credit. Now, there are so many ideas and theories and principles as to why this is. I'm going to say to you, don't even bother. Don't even try to work out why it's a debit when money comes into the cash sheet. Don't even bother. Okay? There are so many principles. One is that the cash sheet is from the perspective of the business, not the client, blah, blah, blah. Don't worry about it. Okay? It's simply a rule to remember. Just memorize. Money in to cash sheet is debit. Therefore, if we're going to record that 500 from Julia as being paid by Julia, if it's a debit in the cash sheet, it's a credit in Julia's account. But actually, there is sense, isn't there? Because it's money that Julia has given to us for Julia. So of course it's a credit in Julia's column in her ledger. On the debit side, it's the opposite, okay, in the cash sheet. Now, there's one other thing that I'm going to talk about, and I'll talk about that in just a moment. But that is the most important thing, okay? That's number one. Now, in all other ledgers, it's the normal way around. So let me just give you this as an example. If Julia has given me money, okay, in return for a bill that's been paid, okay, that would be, again, the same thing. It would be a debit if Julia has paid the bill. But what if I've sent the bill and Julia hasn't paid me yet? We've still got to record that I've sent a bill to Julia. So therefore, it would be the other way around. It would be in the profit cost ledger and Julia's ledger, but this time the normal way round. And I'll show you how that works in a moment. Now, the other thing to note is that there are different columns, and I'm just going to go to this one to show you what I mean. There are different columns. One ledger is called the profit cost ledger, and that means bill to the client. No money, the bill to the client. You've sent a bill. It gets recorded on a ledger called the profit cost ledger. So let me show you how this works. If you look at this particular ledger, this is a very typical layout, in fact, the layout of any of these ledgers. And what we've got is we've got a debit column, we've got a credit column, and we've got a running balance column. Now, luckily for you guys, in the SQE, you're never asked to work out running balances on accounts. It's really only debit, credit, where do they go, which columns do they go in, etc. So let me talk you through this one. So what I want us to imagine, okay, that essentially we have sent a bill to these people. The first one is Patel. Second one is Jones. Third one is Alua. We're only going to deal with those three. We're not going to worry about the rest. Okay? So what we're going to record is the fact that we've sent a bill to these people. So on the left-hand side is the date of the transaction. One of the great things about SQE1 is that you guys are not going to need to fill in any of these ledgers. And accounts is not in SQE2 either. So there is never any drafting of ledgers to be done from instructions that are given. Now, if you guys were doing what's called the CLC, Council for Licensed Conveyancing, to become conveyancers rather than solicitors, you absolutely have to draft out these ledgers, okay, to do with mortgages. Horrible. You don't. But good to know. Down the left-hand side is the date. Down the middle is the details. Tells you who, tells you what. Then you've got debit or credit, and we can ignore the balance. So if you look at this one, it shows you that we've sent a bill to Patel to do with some kind of trust. And that bill is £800. Now, when you send a bill, you fill in the profit cost ledger. It appears on the profit cost ledger. And of course, it appears as a credit because eventually it's money that's owed to us. So it comes up on our profit cost ledger as a credit. Now, the other entry would be in Patel's ledger as a debit. Obviously, if it's a credit in one, it's got to be a debit in the other. And I'm just going to digress for a second, because one of the lovely things about the SQE1 and the accounts questions is, for once, when you get your 5 possible answers, the wrong answers are really wrong in accounts. They're not as nuanced as some of the black letter law topics like contract and EU and crime, for example. They're very wrong. So, for example, it may well be you get a question that says, we have sent a bill to Mr. Patel for £800. How does this appear on Patel's ledger and on the profit cost ledger? So there'll be 5 entries. And I bet you, I tell you, that one of those entries will say credit on Patel's ledger, credit on the profit cost ledger. Well, it can't be credit on both. It's got to be credit, debit. So, and the other answer or the other option will be the wrong way round. It will say debit on profit costs, credit on Patel's ledger. Wrong way round. So my point about the cash sheet only applies to the cash sheet. All the others are kind of normal debit credits, okay? So if we're sending a bill to Patel, it would show up as a credit on the profit cost ledger to identify the fact he's going to owe us money, and a debit on his ledger, again, to show he owes us money. There is a debt there, as it were. So that's Patel. We've got Jones, we've got Alua. The same things apply. I'm not going to lie, this does take a little bit of getting your head around, for sure. But remember, this is only the taster. You are not expected to understand it all after tonight, but I'm hoping that this is going some way to helping that. They always give you two different layouts just to make it nice and simple. And again, okay, we've got this cash sheet, and I've already told you about that. In the cash sheet, I just want to show you this if you can see it. There are essentially two sides, and this is the final most important point I wanted to make. On the cash sheet, there's the business side and there's the client side. There is on their own ledger as well, by the way. So for example, if you look at the first entry, if you can see it, if not, I'll read it anyway. This is a client called Diaz, and we're helping Diaz with the purchase of 1 Brook Street. And it then tells you on accounts. So it looks like if you look at the money in the debit column of the client side, it tells you that there is £300 debit. Okay, so let me just go through that with you. Diaz has given us £300 physically. So therefore, in physical terms, it's going in the client bank account. Reason? It's on account. So how does it get shown in the ledgers? Well, in the cash sheet, there are two sides, two columns, if you like. The business column and the client column. And again, you mustn't put it in the wrong one. So Diaz has given us £300, and that is his money because it's on account. Now it's going into the cash sheet. So therefore, the opposite rules apply, as I've already said. This would appear as a debit in the cash sheet. But which side? Client or business? Client. It's his money. So again, you can see where the multiple choice questions go. Okay, what would the entries look like for Diaz's money on account? And the answer would be 300 debit in the client column of the cash sheet. 300 credit also in the client column, by the way, of his ledger. So the other rule is you can never have it in the client column in one ledger and the business column in another ledger. The ledgers, they have to match. So if it's client side in the cash sheet, it's client side in his ledger. There would be a ledger looking like this, business, client for him, to show that when he pays money to us, for us, it goes in the business side. The client side, it would be money for him. So it's not as difficult as it seems. It just needs you to get your head around that. So as I've said, journal entries, most of the questions will be exactly like I've already said. So there'll be questions that give you a scenario like Diaz. Diaz has given the firm £300 on account. How would that appear in the journal entries, in the ledgers? And you would have to answer that from the 5 options. But you're always going to get a debit, or a credit. That's going to be wrong because you can't have the same. You're always going to get a debit, credit the wrong way round. The minute you see money in and it's cash, it can't be a credit. It's always debit, whether it's for the firm or whether it's for the client. So all of those things, again, need you to get your head around. Okay, so that's the taster, okay? It is a difficult subject, I'm not going to lie, but once you know your rules, it becomes really easy. Most of my students, when I start this, look at me when I'm talking about this chapter, especially if they haven't read ahead, and they look at me like it's just gobbledygook, like it's nonsense, like I'm talking crazy stuff, okay? But then they say to me, okay. And at that point, the penny drops. And that point, you absolutely get what we're doing. Now, the rest of the chapters are mainly about looking at these entries, looking at interest, looking at mortgage payments, lots and lots of other stuff. But if you get that first chapter and you understand the concept, the rest of it honestly becomes a lot more straightforward. Okay, so at that point, let me stop sharing and let me open this up to you. Are there any questions that any of you might have on accounts or on general SQE or on my provision or whatever it is? By the way, I should say that if you are interested in my own provision, just drop me a line, and then we can obviously chase up on that and help you with that. Okay, that's not what we're doing tonight. But are there any questions that anyone has? Quasi, yeah, absolutely. So Quasi is saying to me, it took me 7 chapters to get to grips with accounts, but you got it in the end, Quasi. Absolutely right. Yes, I will show you the book again, Sard. Absolutely, with pleasure. So just give me a second and I'll reshare that and I'll go back to the beginning. And it is these ones, okay? So they are created by Revise SQE, published by a publisher called Think, okay? And that's what they look like, okay? They all look like that one. And you can get them hard copy or you can get them e-version. If you're going to come and join me, we'll talk about those books, okay? Perfect. So I hope that's helped you, Sard. Wonderful. Are there any other questions that I can help anyone with? Sana says, as always, I explain everything so well. Thank you, Sana. No problem at all. I'm glad. Sana was one of my pupils from a university I taught at. So when she was there. So thank you, Sana. That's great. Any other questions from anyone? Pradip, you're welcome and lovely to see you. All the way from New York, I think, if I remember rightly. So thank you. Long Island, Long Island. So yeah, fantastic. Thanks, Pradip. I hope you enjoyed that. And we'll talk soon, okay? Excellent. Charlotte, my pleasure. Thank you too. Any final questions that I can help anyone with? Love my, Tom is saying, love my glasses. Well, thank you. That's very kind. I can't see a thing without them. That's why. Thank you. My pleasure. My pleasure. All right, good. Well, that's all we're doing tonight, really. If you do have any questions, I've got another 5 minutes, so I'll hang around, not a problem. But Iman, okay. Okay. So I taught you as well at university. Wonderful. Okay, fantastic. You I can count on you. Excellent. That's very nice. Thank you so much. And Mikhail, thank you very much. But if you wish to go, not a problem. If you wish to hang around, I've got another 5 minutes. But otherwise, thank you very much. And do get in touch if you want to come along and come on board with our provision. Thank you. Alexander, good to see you again, as always. As always, good to see you. My pleasure. See you soon. George, thank you so much. They are really useful, these sessions. That's the feedback I get from people that attend. So it does give you a good idea of what we're going to be looking at for sure. So that's great. I hope to see you soon, George. That's great. Any other question, guys? Otherwise, we'll leave it there. Oh, Pazzy, thank you. That's very kind. Very kind. Yeah, send it to me on LinkedIn. That'll be absolutely fine, of course, with pleasure. And thank you for the compliment. That's very sweet of you. All righty. Okay, well, I'll stop the recording there. And if anyone does have any questions, please do get in touch.